The conference is now being recorded.
Ladies and gentlemen, thank you for holding and welcome to the NSI Half-Year Results 2018. During the presentation, all lines will be in listen-only mode and later we will conduct a question and answer session. I would now like to hand over the call to Mr. Dirk-Jan Lucas. Go ahead, please, sir.
Hello, everybody. Welcome to our half-year results presentation. Today we have Bernd Stahli, Alianne de Jong and Anne de Jong presenting to you. After the presentation there will be an opportunity to ask questions. I hereby like to hand over to Bernd Stahli.
Thank you and good morning everyone. We'll try to make this a relatively short presentation because we understand everyone is busy this time of summer and we want to leave plenty of time for the Q&A. As you can see on slide 4, where we're highlighting the operational performance, the financial performance, and our balance sheet management over the first half, all metrics are moving in the right direction. We started our strategy basically 2 years ago. We're still executing, and it's great to see that the effects of our strategy and our execution are starting to come through in all the numbers. Just to highlight a few, the vacancy rate is down to 16.6, a 1.8% decrease since the year end, and an even bigger decrease since the Q1 results. The EPRA NAV is up about 5% to 38.44, and importantly, our balance sheet is strengthening again to a LTV of 36.3%, and our cost of debt is down to 1.9. On slide 5, we're highlighting some of the key metrics on the operational and financial sides. The earnings that you can see, they're down to €1.19, but really the number to compare it to is €1.30 versus €1.35 last year, because we've had a one-off that we had to include in our EPRA earnings related to the refinancing of our debts as we did in the first half of this year. Also very interesting to show is the portfolio revaluation. Anne will talk more about it later, but 3.1% increase in the first half is very much reflective of what we are seeing in the Dutch market at this point in time. Slide 7 highlights our asset rotation in the first half. First half typically is quieter, but last year when you look at the individual asset deals. Second half we're already lining up a number of smaller asset disposals again in the second half. The result is maybe a small discount to the book value. Much of it is transaction costs, which are just something we have to accept. And also, given that the sort of assets that we sold in the first half were more provincial assets, we're quite pleased that it's very close to the book value overall. On balance, we've been a net buyer of assets in the first half because our sole acquisition in Amsterdam was bigger than the disposal sites. If we lease up Amsterdam, the Q2 assets in the coming quarters, the net initial yield will be equal to the net initial yields that we have on our disposals, and we will, as a result, end up having a better quality income profile with a better outlook. And what you can see from this slide is that we're still trading the hope that we can lease up our vacancy in the provincial locations for the opportunity to capture a better market, better rental growth outlook, better value add prospects in the better locations like the G4, like Amsterdam. On slide 8, you can see that with maybe what was a relatively low level of activity in the first half on the asset rotation side, there hasn't been much of a move in the portfolio composition overall. We're now at 84% of our portfolio in where we would want to be. That's offices and H&K, and that number will continue to increase as we continue with our asset rotation strategy. Slide 9 gives a bit more detail on that. As of the end of June, we have 41% of our assets in Amsterdam. We've got 60% of our assets in the G4. And if you look at the Amsterdam office portfolio, if you look at the percentage of Amsterdam in the overall office portfolio, we're now at 53%. And by and large, 85% of our portfolio is now in our target cities. And that is where we feel exceptionally comfortable. Slide 10, a bit more detail. We're down to 114 assets. We have no firm target. We just will continue to rationalize the portfolio from here. We have about 20 assets left with an asset value of less than 2 million a pop. We will look at each of those individually and see what is the right opportunity there. The asset value will continue to increase on average. The average asset value that we're looking at for our acquisitions is 20 million plus. Our efforts for our portfolio is still well below that, but those two numbers will start to converge over the next coming quarters. On the left-hand side, you see a little bit where the portfolio is located. The dots that you can see more towards the right end of the map of Holland will start to disappear again over the coming quarters. With that, I would like to hand it to Anne for the property overview.
Yes, thank you. I will start with a slide about the Dutch office market on slide 12 to give you some information about the market. This slide highlights the impact of the improved occupier market. We're happy with that. The figures below show that the vacancy rate for Dutch offices is falling, and as a consequence of that, the rents are moving up, especially in Amsterdam and Utrecht. We should mention that the current vacancy number shown left is up for debate. Savills is indicating a vacancy of 13%, Koesman indicating 11.6%, Jones is indicating our number shown below 10.5%. In our focus market, yields are near record lows, below 4 in some places, and rents are moving up, particularly Amsterdam and also mentioned Utrecht. Given the economy and given the outlook in general, we expect a future pressure on rents to continue. Let's go to slide 13. 13 is about the revaluation of our portfolio. And as Bernd mentioned, this is 3.1%. It's mainly driven by the G4, Amsterdam, Utrecht, The Hague, and Rotterdam. It's driven by HNK and especially Amsterdam. The value of our Amsterdam assets increased with 7.5% last half year. And as Bernd told you, we were happy to add 2 high-quality assets to our portfolio. The first one mentioned on 14 is in Amsterdam, one of the best markets we see in the Netherlands. And as we informed you about it later, I will go on with a most recent acquisition in The Hague presented this morning. It's presented on slide 15. Slide 15 is about the Benting House, and we published this acquisition this morning. We see there's a shortage for high-quality offices in the center of The Hague, and we think we can add value here because this acquisition on the Lange Voorhout is a unique opportunity to add value by upgrading the 6,000 square meters into one of the best ones of the city. This will be ready, I think, in the summer of next year. Slide 16 is about our HNK. We strongly believe in HNK, and we continue to invest in this product. We continue to invest in the quality of the space, and we offer a lot of nice products here, and we continue to invest in this product mix. We're optimistic that the effects of this will become more visible next year and next 6 months. We see a picture of HNK's Schinckel. We opened this in June, and we have turned this older asset with structural vacancy into a nice one and doubled the rent here in a few months. My last 2 slides are last but not least about our new developments. Slide 17 highlights that we still have an attractive pipeline with 3 opportunities in Amsterdam. In Amsterdam, there's a strong demand for high-quality office space, while the pipeline is limited, and 50% of developments are still pre-let. So that's a very good starting point for us. So the focus for us is Amsterdam and making this more worthy. Let's have a look at my last slide of 18. This is about the Laanderpoort asset. Here we highlight the opportunity we have with ING. We are having many positive discussions with ING and the local government. Our buildings will be part of the FinTech campus ING wants to realize at this place. And based on the location of Laanderpoort, this is the best scenario for ING as it's in the middle of the planned campus area. The picture of what it could look like is indicative only at this stage, as we are still in discussion on all aspects, including the building form. We hope to inform you next month or next year more detailed about this nice building. I hope that with these slides I've made clear to you we're very optimistic about the market and especially the steps we've taken. And I will hand over to Alianne to talk more about the financials.
Thank you. On slide 20, it highlights how we get to the EPRA EPS of 1.19. Our NRI is lower compared to prior half year, mainly due to net disposals during 2017. Key is that we have had an 11-cent one-off that's included in the EPRA EPS. This one-off is a consequence of IFRS 9 due to our refinancing. Otherwise, the fall in EPS would have been a modest 3%, but as Bernd said, a much better quality level of EPS than before. Slide 21 highlights the EPS bridge, which is self-explanatory. A lower DRI level combined with lower administrative and lower financing costs despite the negative one-off. Slide 22 similarly highlights the NAV bridge and the impact of the strong revaluation of our portfolio in the first half of 2017 on this NAV. An EPRA NAV increase was 5%. Slide 23 shows the success we have had on the debt side over the past year. The balance sheet is strong with a 36.3 LTV, and this gives us plenty of room to invest in the business. We are comfortably within the 35 to 40% range that we have indicated. The continuing reduction of the cost of debt, which was over 5% in 2013, reflects the progress the business has made, and now at 1.9% very much reflects an investment-grade credit rating in our view. On slide 24, we confirm that now the debt has been refinanced, we are not yet ready. We do want to further diversify our maturity profile by adding some longer dated debt. We believe that with a strong balance sheet and a more focused portfolio, we can lock in attractive rates further up the yield curve.
Slide 25, I guess, is the slide most of you have been waiting for. Over the past year, it's gone a little bit quiet up till about a month ago on the subject of the FBI legislation and what is going to happen. There has been more press coverage and analyst coverage of late on the subject, correctly so, because we're still waiting for the events that are going to happen on Prinsjesdag and also later in the year, the parliamentary vote on the tax budget for 2019. We've always found it hard to explain to investors what is happening here in Holland. As most of you know that in the world around us, everyone is moving to a REIT status. More and more countries are being added. India is starting one, China is starting one, and it is possible to have a REIT status in a country where there is no dividend withholding tax, like in the UK, because in fact they introduced something similar to a dividend tax for REITs in particular. Most people can't understand why the Dutch would do this, because they were first to start the process in 1969 in Europe, and we agree we can't understand it either. Where are we in the debates? What I can say is that we are, with all our listed peers together, engaging with all the relevant parties. It would not be appropriate to go into too much detail at this point in time because these discussions are ongoing. What we can say is that there is a general awareness and understanding that the listed sector has an issue, as we cannot restructure ourselves like some non-listed FBIs potentially can. That creates a uneven playing field, and the start of a solution is with awareness and understanding for those who are in the decision-making process. It doesn't mean there will be a solution, but we certainly have not given up hope like some analysts or have prepared to do in the last couple of months. We show a timetable where we actually, as a team at NSI, focus most on the parliamentary debate in November, December. If it does end up like we will lose our REIT status, Much of it then will depend on what the transitional agreements are and what the legislation will be specifically for the period after 2020. It's very difficult for us at this stage, not knowing what the transitional agreements could be or what the ultimate legislation for us will be, to decide what the real impact is going to be. To give you some guidance, we've done our homework. If we were to lose the REIT status, we could end up with a 10 to 12% effective tax rate. That would be as a hit on our EPRA EPS, but that's before we take any mitigating action. And there are a number of things that we are considering and can do to limit that tax burden from the 10 to 12% that we currently see. We've talked about potential tax loss carry forwards. There are other ways for us to consider mitigating tax effects. Whilst we prefer for things to stay the way they are today, i.e. maintain the REIT status, we do believe that an effective tax rate of 10 to 12% instead of a 15% withholding tax may for some shareholders well be a manageable solution. Slide 27 are the final remarks. We are, as a business, progressing well. We're excited about where we stand. We're excited about the prospects of our business. And there are a number of things to look forward to that will help us get to where we would want to be. The acquisition of Lange Voorhout, as we did today, highlights that, yes, vacancy is an issue and we want to reduce it further, but we also don't mind buying vacancy if we think we can make money. And that certainly is what we will do in The Hague in the coming years. We have already lined up some disposals of smaller office assets. We're also still looking at the disposal of some of our retail assets. Expect more on that later this year. Last year, we bought over 100 million of assets in total. This year, so far, we've done about 50-ish, including the last transaction that was announced this morning. We're convinced we'll get more, again, into a number that is in excess of 100 million for this year. As Anna alluded, we are still in discussions with ING, and if and when there is more to be said on the subject, we will come out with more details. All in all, taking into account our leasing progress, the refinancing, and where we stand today in our asset rotation strategy, we are comfortable to increase our guidance to €2.50 to €2.55, and that's up from the €2.35 to €2.45 that we indicated at the start of this year. We're optimistic. We're looking forward to the second half, and we're happy to take your questions.
Operator, could you please open the line for questions?
Of course, sir. Ladies and gentlemen, as said, we will start the question and answer session now. To be registered for the queue, please press star one. Star one for your question or remark. Go ahead, please. The first question is coming from Mr. Jaap Kuin, ING. Go ahead, please.
Yeah, good morning. Well, let's first start with the operational side. On your EPS guidance, you've increased it, and you've also indicated that you're going to buy 100 million and further dispose. So, if you could kind of paint a picture for the coming years, do you see yourself as a net buyer of assets, and also maybe as a result of that, do you see growth in your EPS number over the coming couple of years? Or would you say that maybe stuff like the retail disposals could in the end keep your EPS outlook flattish?
Bernd here. Good morning, Jaap. Looking at where we are today, at the start of the year, we indicated we've got about 300 million of assets still to dispose of. That process will continue. So far, just under 30 million in the first half, more to come in the second half. We will eventually exit the retail business, and we will continue to rationalize our office portfolio. So growth would mean that we overcome the disposal potential of 300 million in the coming years. Last year we didn't manage to do that. This year, as you can see, we were a net buyer in the first half. We did state that we think we will get to over 100 million in 2018. We wouldn't say that if we don't think it was possible or achievable, so you can take the view that we will. That gives us plenty of room to be a net buyer in the first half, in the whole of 2018. And if we look at further ahead, we've indicated today that there is 120 million of potential capex on our ING development, where we've indicated it would start in 2020. That we need to finance, and you should be assuming, or it is not unreasonable to assume, that we will be a small net seller in 2019, potentially, to help fund that project. But that the capex, the acquisition target for this year, 100 million, and the 120 million of capex on ING is 220 million relative to 300 million of disposals. Net on balance, we don't expect to shrink, and that is certainly not at this stage our intention. Does it mean that we're going into the market to buy assets just because they're available? No, I think we've been pretty clear also in our press release that we've been looking at stuff, we find interesting stuff. Some of it gets priced at a price point where we don't want to participate, and we let go of the opportunity. The one that we have in The Hague with a 7% plus yield on cost is such a complete no-brainer that if we can find more of these deals, we will certainly do. EPS-wise, so far and you can see that from the numbers, and we have not hidden the effects of what we've done over the last 12 months. We've deleveraged. That should have been a negative impact on our EPS. The fall in interest rates has substantially mitigated that effect. And we've managed in the asset rotation process also to increase the quality of our income profile. That at this point in time is a good result. But we've also indicated in the report that we don't expect that we will reduce our interest costs going forward from here, because our next phase is to extend our debt maturities. And even though it would be great if we can lower our fund cost in the process, you shouldn't assume that is going to happen. The next support to earnings from here should be the reduction in vacancy. We've still got 17 million of vacant ERV, and we are making inroads into that, and that is going to be the compensating factor for what could potentially be some net disposals or some further asset rotation out of slightly higher yielding assets with low growth into slightly lower yielding assets with better growth. That answering your question?
Yeah, very comprehensive. Thanks for that. And then maybe one more on HNK, because the results are quite good. Rents, you've also indicated the premium on rents you get for especially the managed offices part. Also that, for now, this is kind of it in terms of number of assets. And a while ago, NSI announced, I think also in partnership with some of the real estate brokers, to be looking for more centrally located assets. I mean, how much are you still focusing on finding more of these assets at the right locations and really pushing ahead with building out your HNK offering?
Well, this is Anna speaking. Yeah, we are still very happy with HNK and still comfortable with HNK offering something that future tenants want. We still believe that future tenant demand is about a combination of conventional and flexible office space. So that's why we still go on with HNK, and I think we will never stop. Well, that's a bold thing to say, but we're a strong believer in HNK and the product. We also believe that the quality of location is something that is still number one. And to be honest, we bought some nice assets the last 3 years, and we make money with that. But you need to have some room to create HNK. And well, to give the KPN and Glasshouse example, we would have made an HNK there if KPN, the tenant, wouldn't have said, well, I like the complete building. So there is a practical situation. So the strongest locations, there we have some tenants in place at the moment who say, well, I like my current room. If the opportunity comes that we can develop some of them in HNK, we will do so. We are still in favor of the product, still trying to redevelop some current buildings into HNK, but more selective than in the past. So we are very keen on combining best places and best product HNK, but no signs of a new one in 18, but no signs of stopping with HNK or having doubts. In fact, we are more optimistic about HNK than ever.
Okay, great, thanks. And then finally on the Dutch REIT situation, maybe to clarify, I have not given up hope, but I thought it was just a changing of probability of the outcome, which has driven some of the stuff I wrote. But maybe just on I guess you said a lot of it about it already, but maybe just get a flavor of what you think is kind of the critical. What's kind of the deadline on any news? Because we all appreciate that the first time we will see something concrete on paper is going to be end of September. So in your minds, I mean, what's kind of is it like spring 2019 that which is kind of the most likely latest date to see some kind of solution coming into play?
We don't know what is going to be in the tax budget for 2019, nor should we know, I guess. I clearly stated, and it's not the right time to talk about it now, that we focus much more on the parliamentary debates later on in the year and less on what is going to happen in September. And I think I'll leave it to that at this point in time.
Okay, thanks. Thanks a lot.
The next question comes from Mr. Nico Lekeri, ABN AMRO. Go ahead, please.
Oh, good morning, guys. Thanks for the presentation. I've got one quick question, given the rather extensive answers you've already provided, and it's about the reversionary potential that I noticed with the retail or the other segment. And I was just wondering, because the situation there keeps getting worse, apparently. So I would imagine that must be making the further disposals harder to do, given that the rent rolls keep getting worse. So what is your feeling of the market and the demand for the remaining retail assets that you have? Do you see that there is still demand for some of the, let's say, the more challenging assets that you have in a portfolio? Or any comments on that?
Thank you for the question. This is Arne speaking. I think, as Bernd said, we are optimistic about the fact that we expect to sell some retail assets coming 6 months. This is based on current negotiations, so it's too early to give any forecast about it, but based on the current situation, and the transaction team is having many conversations with many potential investors, I would be surprised if we wouldn't be able to sell one of them current 6 months. We think that the retail market is, well, some people say it's bottoming out. We think we are nearly there, maybe, but there are signs of improvement. And based on the current negotiations with potential investors, we expect to sell more retail coming months than we did before. Meanwhile, we do all what we can to add value to the current assets, and that's what we said when we rolled out the strategy. And there are some assets where we have to add value to create some cash flow and renew contract before we will be able to sell. But to be clear about the market, there are more signs of a slight improvement of the retail market than the other way around. So that's the answer, I think.
Okay, thanks.
The next question comes from Mr. Max Nimo Kempen. Go ahead, please.
Hi, good morning, guys. Just a quick follow-up on the HNK that you were talking about there. So with all the recycling going on, could we expect to see that get towards, say, 25, 30% of the portfolio? I think it's about 17% right now. Second question, just on that recycling as well, what kind of internal limits do you guys sort of run in terms of balancing that how much vacancy you buy? I mean, how far are you willing to let that vacancy push up again, given the impacts on EPS? And then finally, it may be too early to say, but on the Landerpoort development, what kind of rough yields on cost should we be thinking about at that side? Thanks.
Okay. Morning, Max.
Morning.
HNK, we have no target with respect to a percentage. Once you start to put a number out there, you become a slave to that number, and you have to start justifying it. I can't justify if it should be 17 or 21 or 24.3% of our business. It is what it is, and we'll look at every asset in the context of its risk-return profile, but also in the context of the overall risk-return profile of our business, and we're ranking all our assets on a forward IRR, and out comes something that makes us judge what is the right thing to do at any point in time. It may go up. We wouldn't mind it going up. If it does go up, yes, you can argue we're increasing our risk profile a little bit because we're adding a little bit more short-term letting risk to our business. But then again, we'll be able to mitigate that through our balance sheet by just deleveraging a bit. We're certainly not going to double up on risk by taking a high portion of HNK and leveraging up the balance sheet. On the vacancy, we've got enough vacancy as it is that one building more or less doesn't really make that much of a difference. So if you do the math now, you will see that the 16.6 that we had at the end of June would go to 17.6 if you include the one in The Hague today. That is a small price to pay for what ultimately will be an asset where we're making that return significantly over the next coming quarters. Because if you take into account the capex and you look at where we are going to end up with a yield on cost of in excess of 10%, we're going to make quite a bit of money. There's a huge margin on the project, in fact. Do we want to go back to 20-30% vacancy rates? No, definitely not. We've been very clear in the report as well that if we are doing our job properly with the portfolio that we want to have, we should have a vacancy rate that is below market. And it may take us a few more quarters to get there. Some of the assets we're selling are full, some of the assets we're selling are vacant, and at the moment it's about getting to the portfolio that we want, and then the vacancy will sort itself out. But based on progressive leasing we've done this year, we've got some leases that will start kicking in and reduce the vacancy further in the second half. That's what we expect to see. Lastly, Landerpoort. Anna, you want to talk about that?
Yeah, I wish I could. That's for commercial reasons, and the NDA we signed with the tenant, I'm not allowed to speak about the rent or yield level. The only thing I want to say is there's a good reason for spending so much time on this, and I think you will be happy if you see the result.
Okay, thank you.
Ladies and gentlemen, for any further questions or remarks, please press star 1. Star 1 for any additional question or remark. There seems to be no further questions.
All right. Thank you, everybody. Thank you for your time, and we will see some of you during our roadshow in the coming days. If there's any questions, please feel free to contact me by email or phone, and we'll speak to you soon. Goodbye.
Ladies and gentlemen, this will conclude the NSI half-year results conference call. You may now disconnect your line. Have a nice day.